What's up, everybody? Welcome back to Trades and Gains. I'm your host, Max Pitts, and boom! Just when we thought 2025 was off to a strong start, Trump decides to shake up the markets with a fresh round of tariffs, baby. And stocks are tumbling, the Fed is stuck, and inflation still too hot for our taste. What does this mean for your investments, mortgage rates, and even your grocery bill? Buckle up because we're going to break it all down in today's recap. So, tariffs, inflation, Fed, stocks, your money. Let's get into it. So, what just happened? Major market movers here. Trump drops the tariff bomb. The White House confirms 25% tariffs on Mexico and Canada and 10% on China, effective this weekend, like Saturday that starts. Stocks immediately reversed course, giving up earlier gains and closing in the red. The Dow Jones fell 0.75%, the S&P dropped 0.5%, and the NASDAQ barely held on to a 0.2% gain. Investors were focused on strong earnings from Apple and the Fed's latest inflation data. But then the new tariffs broke. Now all eyes are on the potential economic fallout. So who's getting hit the hardest in all of this? Let's go over some of our losers from today. Now, Apple, it had a 0.67% loss in today's action despite an earnings beat, but China sales are tanking 11%. Nvidia, they weren't safe either. They lost 3.6% in today's action as the U.S. considers further chip export restrictions. So, hey, this might be Intel's time to shine if there ever was one. Now, on the retail and consumer goods side of things, tariffs, this is going to equal higher prices on imports, squeezing Target, Walmart, and Nike. And on the automaker side, Ford and GM lost 2% and 4% respectively, as higher costs for car parts will be passed to consumers. Now, some of our winners from today: gold futures hit $28.60 an ounce today, or this, as we can see here, on the CFDs, it hit $28.17 at one point and closed at around $2,800. Silver and oil are also climbing as investors hedge against uncertainty. The US dollar index surged up about 0.3% in today's action. A stronger dollar makes exports more expensive, but boosts global investments in US assets and defense stocks. Heightened geopolitical uncertainty is boosting Lockheed Martin and the Northrop Group. So, why did we just start a trade war again? That is the big question that is on everybody's mind right now, and I'm sure you're wondering the same thing watching this video. While Mexico and Canada are America's largest trading partners, U.S. consumers rely on cheap imports. This could spike inflation even higher. Companies will likely pass these costs on to you, the consumer. And Trump isn't starting there. He's threatening 100% tariffs on BRICS nation, or BRICS, if they abandon the US dollar for trade. That could escalate into a global trade disruptions, which is bad for markets, bad for business, and even worse for inflation. Now, Fed Chair Jerome Powell's dilemma is the Fed's preferred inflation gauge, core PCE, came in at 2.8%, exactly as expected, but that's still above the Fed's 2% target goal. Traders were hoping for rate cuts by June, but with these tariffs, that timeline just got murkier. This is why it's a huge problem. Higher tariffs equals higher consumer prices. Higher consumer prices equals more inflation. More inflation equals Fed delay rate cuts, and delayed rate cuts is going to equal more market volatility. Simple enough to understand. But what does this mean for you exactly? Well, on the mortgage rates and housing side, home buyers are out of luck. Rates were supposed to drop, but now expect higher borrowing costs. If you're thinking of refinancing, you might want to sit on your hands for a while. Credit card debt is already at a record high. If the Fed delays rate cuts, APR rates will stay high, and this is in accordance with the credit card and loans aspect of what is going to take effect as well. And car loans could get pricier if automakers pass tariffs on to consumers. And finally, stocks and investments. Volatility is here to stay, and it is the name of the game in this market right now. Commodities like gold and oil are rallying as investors hedge against inflation. But big tech could struggle as supply chains start to get squeezed with some of these tariffs that are being put in place. So what are we going to watch next? This is going to come in our weekly outlook report, but Monday on February 3rd, tariffs officially take effect. Will Mexico, Canada, or China retaliate? We're going to have to wait and see. On Friday, February 7th, we're going to get the January jobs report, and the Fed will be watching this closely. And next week, we have Google and Amazon reporting earnings. If they warn about tariffs, expect another sell-off. The bottom line here, tariffs are back, baby, and inflation is still here. The Fed is stuck. This is a recipe for market volatility. We're entering a very unpredictable phase, so watch your investments closely. Now, will Trump's tariffs send the economy into a recession, or is this just short-term noise? Drop a comment below and let's discuss. Don't forget to like and subscribe for more real-time market updates, and I will see you guys in the next episode.